Michael Saylor's Bitcoin Treasury strategy is going viral. In just the last few days, 5 companies have invested $3 billion into Bitcoin. Strategy, $1.34 billion. Nakamoto, $710 million. Metaplanet, $200 million. GD Culture, $300 million. And 21, $458 million. We have entered the MicroStrategy Clone Wars. And of course, every single one is, quote, MicroStrategy squared, or the next strategy. Sounds like buzzwords to me, and is that even possible? For these companies, for any company, to reach the level of Bitcoin accumulation of Saylor. We're going to crunch the numbers and remind you that not all Bitcoin treasuries are the same. And also that it's probably better to just hold the thing and be your own Bitcoin treasury. And just in, Bitcoin treasuries are booming, but is it a trap? And is the US government attempting to covertly attack Bitcoin treasury companies? What the hell is going on here? Welcome back, I'm Rustin, and we've got a lot to get to today. Send it!
The question is, how fast can you grow? It's really a question of how fast can the capital markets absorb a new idea. And if there was one 60-minute podcast you could distribute that just solved it, then you would just let it run, but there isn't. There's a lot of work to be done in educating and helping people embrace new ideas.
As everybody knows, strategy issues equity at the market when it's proper to do so and accretive. Is a shelf necessary for success? I mean, we see Bitcoin companies, Bitcoin treasury companies coming to market in a fashion where they can't have a shelf for 12 months. Is a shelf necessary for success?
I think you can, if you gave me a public company that was a cash cow that couldn't issue equity, but it generated cash, it would have extraordinary success just sweeping its cash flows. Here's my list. I take a company, I take the cash on the balance sheet, I convert it to Bitcoin, that's a success. I take the cash flows, I convert them to Bitcoin, that's a success. I take the dividend, I convert it to Bitcoin, that would be a success. I take the buyback program, I turn it into a Bitcoin buyback program, that would be a success. I don't take the company private, but I do an LBO where I lever up the company, so I basically pledge the cash flows, raise private or public debt, buy Bitcoin, that's a success. I take a company that's got a slow growth business that's struggling, and they sell off that business or do an M&A transaction and take the proceeds and buy Bitcoin. You've swapped a zero growth business that you sell at 1 times revenue for a 60% a year growth business that you buy at 1 times revenue. Would you do that trade? Right? Yeah. You could sell this business, pay 30, 40% tax, and buy Bitcoin. You would still be better off by a factor of 100 over the course of a decade. So you can take a business that doesn't have access to equity, and you can do all sorts of capital markets transactions. If you're a private company, many of those things are also available to you. And of course, you can also work your way down the credit instrument ladder, where you could sell forward contracts of your products. You could sell a subscription to your product, roll that into Bitcoin. You could sell convertible preferred. You could sell straight fixed preferred. You could sell junk bonds. You sell convertible bonds. You could do bank financing. The world is full of people that found endless ways to do it. Warren Buffett, one of his secrets is he bought insurance companies, right? And insurance companies had investment portfolios, and then he was able to invest those portfolios in securities. Well, the trick is the operating company can't hold the security, but this insurance company, has like one layer, and they get like a waiver, and they get to invest in security. So he found a very elegant way to grab a float, but the trick is not getting the float. The trick is being able to invest the float, right? And so what if you get control of one of those insurance companies and you reinvest the float in Bitcoin, right? And of course, there's a million compliance and regulatory issues you got to work through. But I can imagine 100 different strategies that you could pursue to sweep cash into Bitcoin, and a lot of product changes to the way you run a product business or definition of a product that would enhance the product. You could, for example, build an insurance policy where, you invest the premiums in Bitcoin and use it to increase the payout on the back end to grab market share. Or you could cut the premiums in half because you're invested in Bitcoin, and and grab market share that way. And so what you can do is a function of what kind of company you are and what jurisdiction you're in and what what kind of entity you're managing. But, again, Buffett showed you that where there's a will, there's a way. And, you have some people that kind of they want to do the simplest thing. They're like, well, I can only do this and this. And so that's what I'll do, even though I'm going to fail. And there are some people that don't want to fail. And so they'll think a little bit more creatively. And, lest we forget, the greatest investor of the 20th century, his success story starts with buying Berkshire Hathaway, which is a failed textile mill. So it starts with a failure. And he just simply decided, even though it's a total abysmal failure, he's going to turn that into a shell company to become a great investor. And he did that. And I think that every single operating company in the public market is in the same situation now. Every private company is in a situation. It comes down to will. Do you have the will? And do you have the courage?
Every single company will eventually hold Bitcoin, and the Bitcoin Treasury is going viral. Just in, corporate Bitcoin purchases have now outpaced the supply of new Bitcoin by 3.3x in 2025. And Tether bought 4,812 Bitcoin for $458 million after launching Bitcoin Treasury Company 21. And here is David Bailey saying he wants to take it to the next level with $710 million Bitcoin Treasury company Nakamoto.
We're truly becoming a mainstream asset in the capital markets. And, I want to say thank you to Michael Saylor for pioneering that effort. But, we are wanting to take it to the next level. So, flattery is the best form of compliment. So, we are MicroStrategy squared. What we are trying to do is build a portfolio of Bitcoin treasury companies in capital markets globally. We want to have one vehicle that investors can buy in every major capital market. So we've already done deals in Japan, Hong Kong, but we're looking at new opportunities in Brazil, in Saudi Arabia, in UAE, in Turkey. If investors are excited about bringing Bitcoin to each of these capital markets and being a gateway for investors, we want to make Nakamoto the mothership where they can get access to these opportunities by being a shareholder of Nakamoto.
Now, last week, this fund had $300 million in equity and $100 million in convertible debt, and that was Wednesday. So here we are Monday. Did the leaked news of this deal give you a bump of $200 million more dollars in equity and another $100 million in convertible debt?
I think it really is just a signal about this moment for Bitcoin in the capital markets.
Again, not all Bitcoin treasuries are built the same. And yes, this is getting out of hand. And now it's going to be hard to be MicroStrategy squared when you sell your corn.
Are you simply holding Bitcoin on the balance sheet, or are you actively leveraging it?
So we're doing both. I think when we talk Bitcoin yield, what we're saying is increasing the amount of Bitcoin per share. And there's two ways to do that at the end of the day, outside of leverage. It's selling shares to buy Bitcoin if you're trading at a premium to the Bitcoin on your balance sheet, or it's selling Bitcoin to buy shares if you're trading at a discount to the Bitcoin on the balance sheet. So we'll do either. All we care about is that our shareholders are getting more Bitcoin per share as they hold our shares, and that's what they're going to measure performance by.
Maybe I'm just not mathing right, but that strategy doesn't seem like it's going to pass Saylor and Strategy. Can anyone do it? Check out this new feature from the Financial Times on Strategy, and then we'll look into Jack's company and see if 21 Capital actually could overtake Strategy. Here we go.
If our stock trades at a 200% premium to the underlying asset, we can sell $1 billion of the stock, buy back the underlying asset, and make $666 million in that arbitrage of sorts for the common stock shareholders in a week.
Now, this all sounds like a hype cycle. Surely it's unsustainable, right? But for Strategy's many enthusiasts, it's Bitcoin alchemy, turning company shares into half-price crypto while adding value for existing shareholders whose holdings are, in effect, getting watered down.
It's pretty unusual for shareholders to be happy about being diluted because it means that their holding in the company is worth nominally less than it was before. But they're like, if this plan means that you're going to hold more Bitcoin and the value of our shares is going to go even higher, then fine, go ahead.
Another way of saying it is that even as MicroStrategy is increasing its share count, it's getting more Bitcoin per share. It is accretive, not dilutive.
This is quite a feat of financial engineering, and it's part of a wider plan that Michael Saylor's fans have dubbed the infinite money glitch. Selling shares to buy half-price crypto isn't the only thing Strategy has done with its premium. It's also been able to draw in billions of dollars from institutional investors like hedge funds who've been willing to buy company debt in the form of convertible bonds.
Unlike a lot of meme stocks or a lot of companies where there's a lot of hype around them, where institutional investors tend to stay away, this time around, there is a lot of institutional investor demand in Strategy.
But that is not a verdict on MicroStrategy as a stock. They are often arbitrageurs.
What they're doing and what they're looking for is just pure volatility. They are looking to arb out the volatility of the stock.
That is playing off of mispricings basically between the convertible bond and the shares, short selling one, buying the other, that sort of thing.
Because sophisticated investors are able to make money from the bonds using these techniques, they're happy to buy the debt at little or no interest, in effect giving Strategy interest-free loans.
We borrowed about $10 billion in convertible bonds at about 1%. We just borrowed $5 billion in the last few months at 0%. So if you can borrow money for 5 years at 0% and buy your favorite thing, that company would trade at a premium to the underlying property, because what doesn't trade better if I give you infinite free money to buy the thing?
Now, this is where the infinite money glitch comes in. Because Saylor is able to raise money on such great terms, and because everyone knows he'll use the money to buy Bitcoin, whenever he raises money, it sends the price of Bitcoin up. That boosts Strategy's share price, which in turn helps it raise more money again, and the whole process starts over.
It has its own reflexivity kind of embedded in it, in the sense that he buys more Bitcoin, price of Bitcoin goes up. This creates more expectations for purchases, that gives greater premium to MicroStrategy, which enables more purchases.
It's just this sort of wheel of continuously raising money to buy Bitcoin and making sure everyone's happy along the way.
And while people may say they're the next MicroStrategy or whatever, well, don't break an arm yourself off, because every single purchase by another company or a new treasury company being launched acts on the Strategy Bitcoin flywheel. They'll make Bitcoin scarcer and more valuable, thus driving up price. Saylor hits the ATM, so any competitor's buys will fuel Strategy's value and acquisitions further. But let's see what Jack Mallers just said on Natalie Brunell, and then revisit whether or not there can only ever be a second best Bitcoin treasury company. Check it out.
So are all these Bitcoin treasury companies going to be competing with each other, or is this all accretive? Because I even saw, I think a slide was leaked or something from your presentation, and it had you right next to Strategy, right? And this is these are the check marks that we have. So it seems like, you're trying to say this is better than. How should people look at that?
Well, I mean, I appreciate the reaction I got from a lot of the MSTR bag holders, but the reality is, if you are going on Wall Street, and this process is what's known as a wall cross, is when you wall cross investors and you let them know what you're building and you give them an opportunity to invest. So we've already have over $500 million of committed capital from said investors. One of their first questions is, what makes you different? What makes you confident that you're going to be performant? What makes you think you're going to be successful? And so part of my job was making the case of what makes us different than someone like Strategy. I don't take it as a shot or an offensive. I think it's just natural. And I also think that competition drives innovation and progress. And as Bitcoiners and free market activists, we should embrace that. So that's what that slide was. It wasn't meant to be polarizing, but the point that we were making in the slide is, 21, the startup upside we think is really important, is that an opportunity for investors to get in on the ground. This idea of premium to net asset value. The market doesn't know how to understand that, doesn't know how to challenge that. We think we can be extremely accretive in Bitcoin terms, which is this Bitcoin per share metric, and build a case that relative to other businesses with massive treasuries, we're going to be able to go out. We intend to go out and raise a lot of capital in an accretive way and post really performant Bitcoin denominated metrics. And that's what that slide said, with an ability to actually generate Bitcoin native cash flow with Bitcoin native business models. Our point is, the vision for us is to actually use our partners and the experience that I've had and the experience that Tether has had in finding high margin, high growth, cash generating opportunities in this sector, and leverage the capital markets in our treasury to provide value to the space. And so we want to be, the equity in which the capital markets can best participate in this Bitcoin story. And we measure that by being performant in Bitcoin. That's what this BPS and BRR is about. And that's what that slide was about. And, the investors liked it. And maybe some folks on Twitter did it. And I apologize for that. It wasn't intentional, but I think it's good for Bitcoin. Everything's good for Bitcoin.
Okay, now can Jack overtake GigaChad? And then are they all screwed thanks to an attack on Bitcoin treasuries being placed in the Inflation Reduction Act? We're about to bring it home today. But before we do, look at our likes.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Don't forget to like, subscribe, and give us a pam while we take a moment to recognize our sponsors powering this show over at the Bitcoin Way. Bitcoin is on the cusp of the mother of all supply shocks, and protecting your generational wealth is key. Don't get caught holding IOUs and refuse to be placed in a digital gulag. Get your Bitcoin off exchanges. Self-custody is the revolution. And over at the Bitcoin Way, they will coach and teach you how to hold your immutable money with confidence. Visit the Bitcoin Way and begin your journey towards sovereignty today. And if you're looking to get started, you can schedule a free 30-minute consultation using that link in the show notes. You ever try to explain to your friends that the central banking was the century of endless wars, and they just roll their eyes and ask if you caught Rachel Maddow today? Well, all your lonely days are gone, my friends. Thanks to the Orange Pill app, you can stack friends who stack sats. It's the ultimate hub to connect with fellow Bitcoiners, find meetups, and discover every Bitcoin conference happening near you and across the country. Bitcoin is better with friends, and now you can zap them instantly all in one app. What are you waiting for? Download the Orange Pill app today, go hit a local meetup, and who knows, the connections you make could last a lifetime.
Alternative is not just private market, and also hedge fund, commodity, and crypto. Interestingly, recently when I talked to some of the traditional family offices, they were telling me they are now looking at allocation of 5% in crypto. That's the reason why even traditional banks like us, I have to make sure we get our platform ready to take on this opportunity. So I think definitely opportunity.
Yeah.
Did UBS just become bulltards? Probably nothing. But the big question, can 21 Capital match Michael Saylor's strategy? The reigning king with over 500,000 Bitcoin on their balance sheet. Well, right now, strategy is at 568,840 Bitcoin, and that's worth nearly 59 billion. 21 Capital, just 36,312 BTC, worth around 3.75 billion. That's a 15x gap. To catch Saylor, 21 needs over 55 billion at today's prices. But yeah, we know 21 is not playing small ball. They're backed by Tether, SoftBank, and led by Jack Mallers. They've already raised 2.985 billion. And it's looking like they're stacking about 4,800 Bitcoin a month. That's solid. But Saylor, he's stacking 35,000 BTC per month. That is a 7x faster accumulation rate. Let's do some quick 10th grade math. In 12 months, if the pace stays the same, strategy hits nearly 1 million BTC, and 21 around 94,000 BTC. So if you look at that, the gap widens. It doesn't shrink, because every Bitcoin 21 buys pushes the price up over time, which actually helps strategy more since their stash gets more valuable, allowing them to raise even more capital. Saylor's reflexive flywheel is real. Higher prices equal more stock offerings, equal more Bitcoin buys, equal higher prices. Now, long term, 21 could catch up. Tether is one of the most profitable businesses in existence, and so is Jack Mallers' Strike. And if Tether avoids regulatory heat, and if SoftBank opens the floodgates, with Mallers raising something like $20 billion a year, it can happen. But that's a lot of ifs for a company still in its rookie year. But if history says anything, do not underestimate Jack Mallers. And also, we have to worry about Congress deciding to tax Bitcoin treasury companies out of existence. Check this out. A stealth attack on Bitcoin treasuries is underway. Buried in the Inflation Reduction Act, USA rolled out a 15% corporate alternative minimum tax. It's not based on profits, it's based on book income. The numbers companies show to shareholders. And thanks to a new accounting rule, ASU 202308, that now includes unrealized, quote, crypto gains. That means if a U.S. company holds Bitcoin and its price goes up without selling, they still get taxed like they did. Phantom income, real tax. Senator Lummis just fired a warning shot to Treasury. Fix this now. Use the authority in asking them to use their authority to exclude unrealized crypto gains from AFSI calculations or risk pushing Americans' digital asset leadership offshore. This is bigger than one tax line. It's about whether Bitcoin can sit on corporate balance sheets without being penalized for existing. Hold Bitcoin, get taxed. Sell Bitcoin, get taxed. Don't fix this? Lose the edge. Better get after it because the senator is right. Just in, Dubai will soon accept Bitcoin payments for government service fees. Are they moving toward legal tender? Just removing capital gains is the same thing, but stay tuned because I'm sure we're going to have news on this very soon from the senator and the Treasury because, well, they've got their own stack to get to as well, so they don't end up just being the second best nation state.
Bitcoin Act establishes the Strategic Bitcoin Reserve, a federal initiative to ensure that the United States holds a meaningful position in the most important decentralized financial network on Earth. With an eye to fiscal responsibility and innovation, the legislation outlines a plan to phase in the acquisition of up to 1 million Bitcoin, or roughly 5% of its total final supply over 5 years. Importantly, this will be done without raising taxes or increasing government debt. The Bitcoin Act is designed to be budget neutral, relying on Federal Reserve remittances, which exceeded $76 billion in 2023, gold certificate revaluations, unlocking additional capital without new spending, and updates to the Exchange Stabilization Fund. These mechanisms allow us to build a strategic reserve without burdening taxpayers, while also potentially offsetting long-term national debt.
Now, where can you see Giga Chad, Jack Mallers, Ross Albright, and the Bitcoin Senator live in action? At Bitcoin 2025, my friends, and it's coming in hot. Bitcoin takes over Las Vegas May 27th through the 29th. This is going to be the biggest Bitcoin event of the year, and you do not want to miss it. The whole Simply team is making the trip, and we'll be on site, and we hope to see you there. So don't forget to grab those tickets and use promo code SIMPLY for 10% off. Hey, hope you guys enjoyed this one. Don't forget to like, subscribe, and give us a ping by sharing the Sound Money Gospel and set those notifications for the best in Bitcoin delivered to you daily. Hey, we got a lot more coming your way this week, so keep your head on a swivel and let us know what you think below. Can 21 Capital catch Saylor? Hey, I love you guys. Catch you tomorrow. Peace.
If you prefer to go down with the ship, fuck you.